Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday, and we are now on January 20th, 2021, just getting on to 7 p.m. Central Time. So the stock markets, well, they greeted the new president, President Biden, no longer president-elect, to an up day in the market. Welcome to the new administration, and let's wish us all the best. We will see how this new administration goes. It's certainly going to have a different look than the last one, but it's all about getting things done. And now the question is, he has to buckle in. The most interesting thing is, can you imagine, here you have President Biden, who's been a career politician, basically, and you look at all the service he's done, and he's gotten to the pinnacle of what he's done. He sits behind the Oval Desk as president for the first time, something he's probably aspired to for decades. Gets to sleep now in the White House as the president. I can just imagine what that feels like. Very, very interesting. I thought about it when President Trump took office. Each of these men as to what this means for them. But Biden, especially being a career politician, reaching all the way up to this. Very fascinating to me. So let's go to the markets and let them do the talking rather than me. When we look at biotech, you got up to a higher high today, and all of a sudden the market ran into some resistance. Now, as you take a look, it will take very little. If you get under 153.14, you will break this uptrend leg that began with this break under 140 and has carried the market all the way up to nearly 156. As you take a look at moving averages, if that were to be broken, it's possible you want to retreat back to that 18-day average. But why is the market running into resistance right there? Gee, it's like a song, gee whiz. Here's the upper Bollinger Band. You're running into that resistance. Pay attention to it. The odds of closing over those black lines are what? The odds of staying over it, 5% of the time. So that's 95% of the time the market fails at those lines. That's the way to look at it. That doesn't mean it can't push the lines higher and work in an uptrend. But when you first hit it, my rule of thumb is that's where the pros are taking money off. Now, they'll buy the breaks from that if you're embedded, which you're not. You're just overbought. So if this market gives this ground, you could begin a small correction in the marketplace at that point. This is what an embedded reading looks like. When you're embedded, I say the pros are buying these pullbacks in the market, and I have a way to do it, and I'm doing a mini chart course for you that you'll be able to purchase to just see how to work with Bollinger Bands, a key moving average, and those slow stochastics locked in together. Do we understand that? Very, very important. Ideally, you take my regular charting course because I'm going to pick up where that ends. I'm not going back to teach what makes up a slow stochastic, how does it work, how do you apply it. That's not what I'm doing. I'm picking up from where that left off, and I'm working on it right now. But as we do that, and you're up here, I'm still looking for the pullbacks. And yes, the market, unlike coming back here to biotech where it's overbought, I believe the pros will be waiting for this market, right or wrong, buying it, looking to drive the price even higher until that reading is gone. In the XLI, you're in an overbought market. Overbought markets often don't attract new capital. In addition, what you're getting is a market with lower highs, lower lows. But the bigger story is all it's done is come back to this 18-day average, and it seems to be caught. Now, the quadrant the market was trading in November right up to the beginning of the year was between the lower Bollinger Band and the 18-day average. It flip-flopped. And now it seems to be between the 18-day average and the upper quadrant. Just something I'm recognizing. Is there a trade out of this? Well, no. Why? That's how I'm viewing it. Because even if you got over 89 and created a pattern of higher lows and higher highs, you're overbought. That doesn't mean the trend wouldn't be up and the bias up, but you'd be overbought regardless of what you do. Is there a downtrend? Well, you'd have to close underneath the 18-day average to get me bearish. Haven't been able to do that. In XLE, I don't see a trend at all. What I do see is a market, if we count the numbers of days that this market's over 80, today, both numbers over 80. Yesterday, that's Tuesday, both over 80, and on Friday. So you have an embedded reading. You had it the day before and the day before. Now what you don't want to see is that red line close under that. You're at 82.54. As long as the market doesn't settle under 79, I think that the marketplace is still being bought, still looking for the potential of going to higher prices. I backed away, by the way, in my advisory services on buying the energies because I saw another piece yesterday that was really bothering me, but it looks like so far that piece hasn't come alive. QQQ, overbought, attempting to stay over the upper Bollinger Band. Now, it tried that here. It tried that to get up there, couldn't close over it there. It did back here. So far, each time it's done it, it hasn't been able to run. We'll see if this is coming back to life via the FANG stocks and the others, or is it dying away? We are in earnings season, so you got to pay attention to that. Are we trending? Not in terms of the swing line. You got a lower low, higher high. I respect breakouts, attempts at them more or less, and that's what this is. Will it have any legs or not? Okay, we'll see. In the emerging markets, a very crowded trade. We had lost the embedded reading. The market would have to get up and over, let's see what the high is, right? Here's the high before you lose the embedded reading. I believe that's it. 75.75, or is it here? It's 75.75. So until that number's taken out, I'm looking for the 18-day average of closes, and I think contra-trend traders that are bold are probably selling this rally looking for that. I'm not that bold. I'll wait on the market. GLD ended a downtrend today. Now, don't get excited, you gold bulls. That doesn't mean that it's all of a sudden turned up. It hasn't. What it has done is it keeps respecting the 200-day moving average. That's a value number when it's under the market. The long-term gold bulls look for reasons to be long before they're there. And coming down to this average could be that reason. Now the market, if it goes up, has two more layers of resistance, 176.16 and 177.23, the 18 and the 100-day average. Momentum-wise, you're oversold trying to get a pop in the market, so we'll see if it can follow through. The gold miners got up just high enough today at 36.32 to break this previous high. So this leg to the downside, as far as swing lines are concerned, is over. You've reached your objective without hitting the lower Bollinger Band, and it's gone neutral on you. Again, the same resistance points, but more of them. The 18, the 200, and the 100 are above you, but it's going to watch gold. If gold comes alive, it'll come alive, and even Bitcoin's been in a correction phase. In TLT, we're having a correction in a market that has downside bias. You've now got higher lows, higher highs, oversold, but with the bias down, bias is a filter on the swing line. The swing line's up, the bias down, the two wash each other out. FXE, still very much in a downtrend. I would get interested in saying this market has run its course to the downside if you take out 113.99. Until that occurs, you're very much in a bear market in the swing line. The bias down, but oversold, admittedly. The first 2 days, today's the first day where the first two numbers of the slow stochastic are under 20. You'd have to do that for 2 more days for the market to embed. So we'll see if that comes about or not. I want to remind you, my guide to technical indicators, volumes 1 and 2. This is so simple to keep up with. I'm going to just show you first. You can go to our website, and under free offers, this is all there for you. Now, these volumes will cover this whole array. There we go. It's going to cover all these different chapters because it's volumes 1 and 2. It comes from our good friends at Modern Trader. And these are the price charts, the different patterns. These are the actual charts, what they look like with the examples, how it's explained. It's a great primer and a refresher if you have forgotten some of the basics of what these are. My charting course goes hand in hand with a lot of this because Teaching the traditional way is what I try to do, and then I teach you how to make certain modifications as time goes on. You'll always hear me talking about money management. Money management is a filter of anything technical you see. This isn't school. This is real money at risk. Therefore, you've got to learn money management, because at some point there's got to be a plug you pull and say, I know what the charts are saying, it's not working, and away you go. Charts are a guide. They are not the know-it-all. They're a guide, a roadmap to what you're trying to get to in a price. I'm Ira Epstein. Remember, you get this by going to our website, and under free offers, take advantage of it. I will talk to you tomorrow.